Hey traders, this is Blake Morrow with Trader Summit, and I'm very happy to bring in, it's been a while since we've had him on, and it's so nice to have him here. We have Bill Baruch. He is the founder, president of Blue Line Futures, Blue Line Capital. Good to see you, Blue. Oh, good to see you, Blue. Good to see you, Bill.
Thanks for having me on. It's always a pleasure to join you.
You know, it seems like it's late in the day for myself and probably you too. You know, I trade currencies, you trade a lot of commodities. You've been on CNBC earlier. It's like the day is long, and so sometimes my words get jumbled up a little bit.
It's all good.
So, hey, Bill, really great to see you. But I wanted to get your views, first of all, on the CPI release, how the market reacted, and what are your thoughts? I mean, you saw the data come out, dollar strengthened, precious metals have reacted, stocks have reacted negatively. Do you think that the market's finally getting that idea in their head that, well, wait a second, we're not going to get all these cuts this year? What are your thoughts here?
Yeah, markets are certainly pricing it in. I mean, they're really less than, let's call it a third, 33% or 1/3 probability that the Fed would even cut in May. So, I mean, it's really moving out to the summer. Some people are still of the belief that May is a foregone conclusion for the Fed, but that doesn't matter today. What matters today is inflation and the inflation's impact on their decision. And what we're seeing within the inflation numbers is not, it wasn't a surge of saying hot inflation, but it was stronger than expected. I think, especially with the anticipation of seeing a two-handle on headline inflation, that was something that was missed, even though headline inflation was basically flat month to month. And then the core inflation month over month increased by 0.4 when they're looking at for 0.3. And then we look at the numbers, shelter is just sort of steadily reemerging as an inflation anchor here. So that's something that I'm sure the market is certainly noticing right now. It's not the picture that everybody had imagined, say 30 days ago or 45 days ago, at the turn of the year, when there was basically a near 90% probability that they were going to cut in March. March, I think it was. So yeah, now it's being digested, and markets are reacting right now and taking it in stride.
So, you have this reaction, obviously stocks have come off. We've seen a big move in gold and the dollar predominantly. We've seen a big move in yields too. What's your view on those markets? So you got yields breaking out. The dollar looks, abnormally strong. Gold, slumped below 2,000. Do you have any downside targets for gold and upside targets for maybe the dollar and yields?
Yeah. Well, for what it's worth, the futures that we trade, gold futures are still hanging right above 2,000 right now. But the real issue is from those futures, the April contract is what we're watching. The April contract has taken out a floor that was there right around 2023. That aligned with that April contract itself, 200-day moving average. And then you had the Fed December 13th, where gold and silver settled before Fed meetings. 2016 was that settlement and created a gap because gold rallied after the Fed comments, after Powell's comments that started pricing in a cut in March. So there was some tremendous support in that area, and we've just really chewed right through it, hanging by a thread now above 2,000 in the April contract. If what we look at, a 618 retracement from this entire range, going back to the low prior to the Middle East escalation and Hamas attack on Israel, that low in October right there was, a 618 retracement back to that from that blow off top in early December, comes in right around 1980. And, that is where the continuous 200-day moving average is too. So there's a little consolidation there to look at. 1980, I remember trading gold as it was rallying in October. 1980 was a pretty significant area too. That the 200-day moving average for that December contract was trading at that level during that time. So, it could be a bullseye looking at 1980 in April gold right now.
So when you have like this move that we're seeing in the dollar, and a lot of people attribute it to, obviously strong data out of the U.S. exceptionalism is back. But at the same time, a lot of people also understand that the Fed is probably going to, I don't think we'll be the first central bank to cut rates. Obviously, with the Swiss National Bank and the inflation data they got last night, of all things, where you got this divergent data. But at some point, people are going to start looking at the dollar as maybe a sell as the Fed goes to cut rates, whenever that point is. That you would think would stabilize gold at that point. which seems to coincide with maybe some of those levels that you're talking about.
Yeah, if it's again, it's uncertain here when the Fed's going to move. A point that I like to make here is, what was the Fed's goal in hiking rates at this historically fast pace? It was to tame inflation. Now, to one part of the argument, Fed Chair Powell, likely, how much longer will he be in place here? Does he want to go out as the person that was not hard enough on inflation and continue to reemerge? The argument would be that they're going to hold rates steady up here for as long as they can, and that would mean into the back half of 2024. But the other side of the argument is, yeah, the economy is moving along, but fiscal policy in Washington is really the main driver here. Fiscal policy is also giving a tailwind to inflation. If they could contain fiscal policy in some degree, then it really can start to counteract a lot of the growth that we're seeing. Now, with that said, I do think that there are pockets in the economy that are hurting. I mean, look at commercial real estate. Look at what we're seeing with New York Community Bank. A lot of the assets in some of these banks we're sort of on the, was that a one-off question, or is that more of questioning, is this a bigger or broader, or at least centric theme within some of these regional banks again? And if rates continue to rise, that's when things break. So ultimately, look at the Fed funds rate here at 5.25, 5.5, and inflation even today was not below 3%, but call it right around 3%. I mean, that's a real yield of 2.5% here. And if they want a recession, they keep real yields here. That's plain and simple. If they want a recession, they don't act on cutting rates now. And so the question would be, do they want to break something again? And that's really what it comes down to. I don't think so. I do tend to lean that even though today's data a bit hotter, shelter reemerges a little bit, stock market is heating a bit. I want to call it overheated, but it's getting there a little. I would say though, it's I think May, they should stay on that path, in my opinion, to bring rates down in May and kind of see where it goes from there.
Well, speaking of broken markets, and I heard a quote yesterday from one of my trader buddies in our community. He's like, it's only broken because you're just not trading it right. And I'm like, that's a good point. Most people, they're like, well, yeah. Oh, the market's
people
broken.
call it a bubble. People call the stock market a bubble because they're not long, or they're not participating. They don't own Nvidia. Right. I mean, it's not a bubble. I mean, for those listening, don't worry. It's not
that's a great point. But let's talk about a market that just doesn't act so well. You got China and you got copper. And this is kind of the point I wanted to bring here, because I know you focus on precious metals a lot, along with a lot of other commodities. But you got copper that's really under pressure. You got China that seems like they took the spaghetti, up against the wall type of analogy, and they're just seeing what sticks. But is anything sticking? I mean, how do you view China right now in its current environment?
Yeah, I mean, it's really, really tough. I think you started to get a little bit of that cleansing that's needed for things to bottom. Copper, just starting there, it's been a heck of a range to start the year. I mean, it very technical trade. It went right up to back test a trend line breakdown, earlier this month, or actually the end of January, up near 390, and then just fell like a rock over the last week and trading around 370. And, I think a lot of that was the deflation data that came out of China, the CPI data, the economic data still continues just to be below expectations and just meager, along here. And that's really a tough thing. And China's made some attempts to jumpstart the economy, trickling little different policy measures. And I don't think the market really wanted that. The market wanted a bazooka. The market wanted the People's Bank of China to really come in and make an impact, save something, and that's not what they've done. They've let the property sector really sort of cleanse out, wash out. That correlated into what we've seen here and the Hang Seng, and we've seen the Chinese stock market. I mean, they've just been bludgeoned. So I think we've seen maybe some cleansing here, and coming out of this week's holiday in China, maybe that could start to bring maybe a turn the corner, if you will. But copper did make a little attempt through the last couple of sessions, the middle of this week, to get out of the hole that it dug itself in last week. Now, I mean, with CPI, the dollar rising again, I mean, metals are just really, like we talked about, gold just really in the back foot. I'm not sure, where we're going to finish the week. I would, not put any targets on anything. I mean, where things would be right now, but I do believe that we can start to turn a corner. Talking about China specifically again, I mean, it's the year of the dragon. If that means anything to people, it's something that really bring prosperity. It's usually typically very good for commodities. And I think coming out of this, maybe they try and ride some of those coattails of expectations that come with it. And we see more of a bazooka shot from the People's Bank of China to jumpstart the economy.
Well, let's hope so. There's one last market I wanted to hit you up for, and you talked about meandering. Crude seems like it's meandering. It seems like we're in the $70 to $80 range, and I could argue, me personally as a trader, I could argue bullish crude or bearish crude. I think I could really argue 50% one way or the other. Seems like the market's in that mind frame as well. How do you feel about crude right now? Do we see sub 70 or do we see above 80 first? What are your thoughts here?
Yeah, it's been a really interesting range, $70 to $80. Part of me, taking the back out of the forest to see the trees sort of thing it is an election year. And, I would imagine that the White House doesn't want crude oil to really start getting going higher. It would probably impact some perception of the White House. So that right there, I think, is a headwind. With that said, in our commodity fund, I'm currently have some long exposure in crude that we have reduced a little bit on this rally. Through really good move into $75, $76, but we still have some exposure in the commodity fund that I'm managing for crude. If it continues to we could capitalize on that. We have an energy fund as well that is focused in commodities, but really it's more of a statistical arbitrage fund. It's systematic and looks down on sort of the calendar spread. So it's not really directionally on a play with crude. But with that said, I think we're approaching this $80 mark, and is that going to be the ceiling? I wouldn't be surprised to see it get out above there, and that's why we still have some long exposure. But what we do on Blue Line Capital on the wealth management side of things, and this is security positioning, is we've maintained a very long overweight position in energy stocks, with Marathon Petroleum really being the center of that. There's really some terrific performances across some of these energy names, some of the mergers and acquisitions that are going on right now in that space. There's some really great investments. Now, with that said, we've our overweight in our wealth management side. The S&P has a 3 or 4% at most weighting in energy, probably a little lower now given the tech move, but we've been up to 15 to 17% energy at times last year, at times 2022. Right now we're hanging around about 8 or 9%. Which is still overweight. I'm still very optimistic on the free cash flow in some of these energy names. So there's a lot of really things to be excited about within the energy space, even though crude oil is in this range trade. And a range trade isn't that bad either, because it's really it's something you want to kind of hone in on and potentially try to capitalize on as a trader. So I think there's a tremendous amount of opportunities, regardless where we find crude oil in the next few weeks or few months.
Well, I think you best said it. It is an election year. The White House will probably get crude somehow below 70. Somehow they got the Kansas City Chiefs to win, and somehow Taylor Swift is involved. So it all happens like that, right?
I took the Chiefs on Sunday night, so I'm excited for that. I rode Mahomes. Football real quick. They're giving you 3 and 4 points. Vegas is giving you 3 and 4 points to take Mahomes to the playoffs. I'll take that every time.
Me too. The guy's an animal, and my wife actually took that bet as well. So hey, look, Bill, I tell you, you're one of my favorite people to interview. You are a trader at heart. You may be a fund manager, and you started Blue Line Capital, Blue Line Futures. That's all great, but deep down inside, you are a trader. You talk trader talk, and I love it. And I think other traders need to know how to find out your work, find out all the videos that we publish on Trader Summit. What's the best way for them to follow what you do?
Yeah, we have 2 websites, bluelinefutures.com. There's a tremendous amount of content up there, educational content. We work closely with the CME group to help people who are new to trading, but we also work with people very experienced, and as well as hedgers, whether you're hedging on the agriculture side or the metal side. So we work with people up and down the scale, from novice to family offices to institutional hedging. But bluelinefutures.com, we have a tremendous amount of content up there, actionable content to educational content. Check it out. But also on the wealth side, bluelinecapitalwealth.com. You can submit your information on any of those places to connect with us. But if you ever want to see some of the videos of me on CNBC talking about some of the equity stuff, we have all those videos on bluelinecapitalwealth.com. So check us out. We'd love to hear from you.
Awesome. And I have to say, I really enjoyed my very first interview with Phil Stribel. the other day. He's a great guy, super knowledgeable as well. So nice to have you guys here on the Traders Summit. And Bill, I'm going to be circling back with you in a few weeks, and I'll get your updated views on the market once we chew through all this mayhem that we're going through.
Can't wait for it. Looking forward to it.
Thanks, Bill.
Yeah, thanks.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.